You're watching Best Investing Tips from bestinvestingapps.com. And in this video, you're going to learn our top 8 tips for getting started investing right now. This video will give you some great new tricks to become a more effective investor. Plus, if you stick around all the way till the end, we'll tell you about the one tip that it took for me to get started investing. My number one tip for investors is to know the difference between trading and investing. So let's check it out. Traders, often seen in movies and on the news, they buy and sell securities or stocks frequently. They're trying to make profit, and sometimes this is risky. Investors, however, normally have longer time horizons, and they aim to gradually build wealth over time. Investing usually is a little bit longer time horizon and maybe less risky or volatile than trading, which can be short day trades, hour trades, minute trades. They can be risky. My number 2 tip for investing is to consider concentration over diversification. Now, of course, this isn't for everyone, but a normally diversified portfolio usually ends up somewhere in the middle of returns, as you can see by this white AA or asset allocated portfolio. Instead, if we were to concentrate, let's say, into REITs, and we owned only REITs, we would gain 26% in 2000, but we'd also lose 15% in 2007, whereas a balanced portfolio tends to stay in the middle. If you can tolerate short to mid-term swings in prices, then maybe concentrating into certain assets that could potentially gain more over the long term could be for you. My number 3 tip for investing is to understand the difference between volatility and risk. Often the two are confused. Volatility measures changes in the price of something. As you can see here, often these large dips in prices are considered risk, but when really that's just a measure of volatility. Now, volatility is a type of risk. There are also lots of other types of risks. There is credit risk, which is the risk of someone or a business defaulting on a loan. We also have country risk, the risk that a single country does better or worse than other countries, maybe because of war or even politics. We have interest rate risk, which is the risk that interest rates will change. There are lots and lots of different types of risk. Some types of risk apply to different investments, so be sure to understand the difference between volatility and risk. Prices will fluctuate. That's just one aspect. My 4th tip for investors is to beware the trend. There was a time near the inception of the Dow Jones Industrial Average where almost all of the stocks were big railroad stocks. These companies dominated America. Today, they're a small fraction of the stock market. Were you to have bought one then and then held onto it, you could have lost a lot of money, but you might have made a lot of money in the short term. Today, there are lots of new trends. Tech stocks have largely replaced, and marijuana is a brand new stock trading fad that's up and coming. Maybe it'll make a lot of money, or maybe it'll disappear, just like the railroads did. My 5th tip for investors is to just turn off the news, or at least don't let it affect your investing. Traders might use the news in the short term to make money on changes in the market, but for investors with longer term time horizons, it doesn't really matter. So just turn it off, or at least don't let it affect your buy and sell decisions for your investing. My 6th tip for investors is to be ready for the next market apocalypse. As the media would like to have you understand, it's the end of the world. But it's happened plenty of times. Just be ready for it. Have a strategy and a plan in place. When the market does tank, you can rest assured a lot of people will be doing this, when instead, you could be buying down here on the dip where everything's at a discounted price. Have a plan and play it smart. Tip number 7 goes hand in hand with the last tip. What I'm going to say is that if you can't control your fingers, don't open your brokerage account. What I mean by that is, don't come in and log on to your brokerage account if you're freaking out about something. If the market's going down or if there's some bad news, generally, unless it's part of your trading plan or your investing strategy, you should avoid buying or selling or trading on emotion at all. And finally, tip number 8 for investors is to take advantage of something called dollar cost averaging. Dollar cost averaging basically means that you're going to stick with a plan of investing a certain amount of money every single month or maybe week or maybe year. Because of that, the price of what you're buying is going to be different at different times. So, for instance, if I bought $1,000 worth of shares at $20, I'd get 50 shares. The next month, at $16, I might get 62 shares. That's more. but then some months I might get less. So dollar cost averaging means that over time you'll get the average, and according to most research, this outperforms lump sum or dropping a bunch of money in all at once. Thanks for sticking with us. We hope that the video was helpful to you, and if you learned something or we helped you make money, save money, or invest more intelligently, hit that like button below. Go ahead and subscribe because we're going to be making a lot more great videos about investing and investing apps, how to use today's technology to put your money to work. Now, as a bonus, we're going to tell you about a Roth IRA and how you can open one. If you haven't done the research and you're not sure if a Roth IRA is right for you, you'll have to go and ask a professional or do the research yourself. But it took me a really, really long time just to figure out how to open a Roth IRA once I decided that was the right choice for me. So to make it easier for you, I'm just going to show you what to do. We can go to Google and we can just type in Roth IRA. But unfortunately, that brings up a lot of options that don't really help me. This is where I was stuck. So instead, we're going to go to a brokerage. Now, we need a brokerage in order to open a Roth IRA. Most brokerages will let us open a Roth IRA. So I'll go to E-Trade. Do your own research. Decide which brokerage is correct for you. Then all you have to do is click Open an Account. It'll give you lots of options. A brokerage account, a rollover IRA, on and on. I chose Roth IRA because this was right for me, and I encourage you to do your research on it because they're great investment vehicles. You could open up a Roth IRA with lots and lots of different brokerages, so be sure to pick the one that's best for you and just go to the brokerage and open an account through that brokerage. This has not been specific investment advice to you. I have not considered your portfolio or your risk profile. I don't know anything about your investing needs, and I am not an advisor. Hopefully this was educational and you can continue to gain a great education as you learn to invest yourself.